So I would like to introduce Einstein Kihanda. He is the CEO of ICA Lion. He's a holder of a double master's from 2 different jurisdictions. He's also been recognized by his peers in the financial industry for excellence and for being, being a vice chair of one of their associations. As we've mentioned, he's currently the CEO of ICA Lion, and he brings all of that wealth to the table. Prior to being at ICA Lion, he's been with Stanlib Investments, and he'll tell us a little bit more about himself and his views. But I wanted you to have that bit of background about him before he starts to talk to us about REITs. And the other person that we have on our panel today is Mr. Kenneth Masika. And Kenneth is the chair of the REIT Association of Kenya. We're going to get into definitions in just a little bit, but before we do that, I'll open the floor to the gentlemen to tell us a little bit more about themselves and what they'd like to highlight, especially when we're talking today about asset management. So first to you, Einstein, please go ahead.
Thank you very much, Wangeci. It's a pleasure to be here this afternoon to talk about investments. And first is, of course, is to appreciate Regal Africa for the excellent work you've done in organizing this conference. I have also learned a lot in as far as matters to do with wealth and investment management are concerned, because we learn every day. There's no time when learning stops. So I'm glad to be here this afternoon to basically talk about asset management and specifically REITs, which I believe will offer us an opportunity to demystify a lot about what you may have heard, or also to basically provide information about the opportunities that exist in this very, I would call it new, but it's not been very new asset class. And I hope this will give us an opportunity to be able to provide a lot more information. So I'm glad to be here this afternoon and look forward to continued discussion and participation in this conference. Thank you.
Thank you for that, Einstein. So we're going to hear from Kenneth Masika. If you would like to go ahead and just allow me to put you on the spot, Kenneth. Are you part of a family business? Because you come from a famous name in Kenya as far as real estate and property is concerned, or is it just a coincidence that you happen to be a director in a firm that bears the same name?
Thank you, Wangeci. As always, it's a pleasure to be here. Let me echo Einstein's statements. I think we've all learned quite a lot today about investment. And yes, like you're saying, yes, it is true. My name is Kenneth Masika. I'm a property valuation surveyor by profession. And yes, the older Masika in Lloyd Masika happens to be my father. Yes.
Okay. But before you continue, I will point out, though, because we had the whole session, the whole conference today is about building wealth, right? And we had this whole bit around succession planning and wealth management in the morning. And the reason I bring that up is because one of the tensions that were spoken about today was how do you get the next generation interested, right? But and again, forgive me for putting you on the spot, but I think that it's also really important to point out that you are a trained valuer. You went to school for this. You're a graduate of Reading University. You've been doing this for a long time, and you didn't just get that directorship level because of patronage. It was something that you earned, and I think that that's also really important as we speak about asset management and we look at family businesses as a creator of that particular wealth, that in order for it to expand and to grow, that even if you do bring in family members, that they do come in and that they're qualified and able to do so. So enough about Kenneth on the personal side. We're going to talk to you today because you're the chair of the REIT Association of Kenya. And the REIT, as according to the Capital Markets Authority, which is the one that governs this particular asset class, REITs are defined as a collective investment scheme in real estate that is structured as a trust where an investor owns rights or interest in the form of units and earns returns from income or capital gains. the property is held by a trustee on behalf of unit holders and is professionally managed by a REIT manager. So that's a lot of jargon. Could the two of you please break it down for us in what it means, and also how is that different from, you know, how SACCOs own and build and sell real estate?
Okay, perhaps I'll give a background of sort of what REITs is, and then maybe Einstein can speak through running an active REIT and also being an asset manager. He also has a view to how SACCOs run their things. So maybe I'll start with talking about where the REIT market started, the types of REITs we have, the structure, the advantages of the REITs, and then maybe I'll stop there. So in terms of the Kenyan market, this kicked off in 2013 when CMA enacted what are called the REIT regulations. And in there is where the definition of a REIT is found. Those regulations also define the types of REITs that you can have in Kenya. We've got three main types: an income REIT, which invests in already existing assets that are generating income. You've got a development REIT, which as the name denotes, is a REIT set up for development. So they acquire parcels and then develop or acquire land that is due for redevelopment. Then you have a Sharia compliant REIT, which is basically a combination of the two, just that it's Sharia compliant with Sharia regulations. Easiest way to identify the REITs from each other is there's normally a letter before the word REIT, and that will define which one it is. Like Fahari has got an I, which means an income REIT. A D REIT will have a D, and the Sharia REIT an S. In terms of structure, it is very simple. If you can just picture a cross, right, with sort of your horizontal and perpendicular. Where they meet, that's where the REIT entity sits. On the bottom of it, you've got the properties, which generate now rental income and income into the REIT. On the top, you've got the unit holders or shareholders, who put in their money into the REIT to enable the REIT acquire the assets, and in return, they get their dividends. On the left-hand side, you've got your REIT manager. He performs, or they perform, the functions of running the REIT on a day-to-day basis. And that's what, like in the case of Fahari, that's what ICA Lion does. On the right-hand side, you've got the trustee, who really performs the roles of an oversight and a custodian. You'll find the assets that are owned by the REIT actually do not sit in the REIT. They're actually held in trust by the trustee, and the trustee also keeps an eye on what the REIT manager does. And if you look at the regulations, it is very extensive in the roles and requirements for each of the parties and what they do and what they cannot do, and how you onboard them and how you get them off. So the regulations are really, really well structured. What is the advantages of investing in a REIT? There are 7 main ones, and I think I'll just go through this quite quickly. There is diversification. It enables you to invest by buying into a REIT. It enables you to get a small share in a REIT that has invested in retail, light industrial, commercial real estate, shopping centers, and the like of it, which is very difficult or quite expensive for individual owners to invest in. REITs are transparent by the nature of the regulations. There are very high reporting standards that REITs have to adhere to. They are regulated as well, which is one of the key things that people tend to miss out when you read the REIT definition. It is a regulated scheme. So CMA has an oversight into it. Due to their tax advantages, there is sort of a dotted reporting line to KRA, and the trustee keeps an eye on it as well. So there is governance and regulatory accessibility. If you look at Fahari, they invest, and I keep giving Fahari as an excuse that for a long time they've been the listed REIT in Kenya. They invest, they've got a mall, they've got some light industrial, commercial properties out in industrial area. If you look at their market capitalization, accessibility means you just buy shares in it. So you don't need to be going to the bank to get a big loan to acquire the shares. So in political jargon, it makes it accessible to Wanjiko. Liquidity, the shares are traded on the NSE, so you can buy as many as you want. You can sell when you want. So entry and exit is quite easy, and that is actually one of the key, one of the major advantages of REITs. We all know that property takes quite a bit of time to acquire and onboard, and selling as well does take quite some time, especially now given where the market is. Those timelines have just extended. It is also provides guaranteed steady returns. In terms of REITs, and especially income REITs, you tend to find the returns are based on leases. Now, we all know how leases work. You get a client in, being commercial property, it will normally be a 6-year lease with an escalation every 2 years. And so you can see where your income is coming from. Then in terms of returns, by the regulation, REITs to maintain their tax-free status must pay out a minimum of 80% of their profits every year by law, without exception. So that guarantees you an income every year, provided they make a profit, which they do. And then the biggest and the final one is the tax advantages that are encased in the REIT structure. When a REIT acquires an asset, number one, if it's a commercial asset, they're VAT exempt. They do not pay VAT on commercial assets. In terms of the money, if you remember the structure that I gave, you've got the properties lying at the bottom with the income flowing into the REIT. When that income moves from the property into the REIT, that is exempt from corporation tax. And also when the dividends is paid out, it's exempt from tax with the exemption of withholding tax. That's payable. So unlike you holding your own property, especially with what a lot of Kenyans tend to do is you'll create a company that then holds the property and you as a shareholder. So you'll find the company will pay a tax on the income they get. And if you as the shareholder draw a dividend or declare a dividend from that income, you again pay a tax. So you can see there's a huge tax advantage in that. And finally, when a REIT does sell a property, they are exempt from capital gains tax, which you know has been quite a big challenge to sort of private property investors when they come to sell. It does impact your return. So that's the basis of it in terms of structure and advantages. In terms of what has happened since the regulations were enacted in 2015, we had Fahari as the inaugural listed REIT on the NSC. Then in end of 2017 in November, the REIT Association came into being. The association's main role is basically growing the REIT space, which we attempt to do by market education, by lobbying, to make sure that we keep the incentives and the advantages that we have in the REIT structure and grow them. We also try to be a one-stop shop for anybody with any questions, queries, thinking about registering a REIT. At least now there's somewhere, I think like you rightly said, everybody thinks it's a very complicated thing, but it's simple at the basis of it. But at least now you know the REIT Association is there. We do not hold shares or anything in any particular REIT, so we are independent. And we provide any information that anybody looking to get into the market is looking at. And then in 2021, we had Aecon come through with their income. They have an income REIT and a development REIT. So that has been the activity that has been going on in the Kenyan REIT market. I think for the people who are here investing, we do know that there are other countries in Africa that have REIT markets that are starting, but in most African countries, they're still in the nascent beginning of things. They're not as advanced as Europe and the US, which has been in the REIT sector for almost 60 years. And I think one thing to bear in mind is, I think like Sandeep said, property is a long-term investment. And then that's one thing that always needs to be borne in mind. I think people tend to look at REITs and say, hang on, this thing is not performing like Safaricom. But if you ask somebody, if you develop your property, you know what you bought it for, you develop it, you don't expect to sell it in another month or 3 months or 6 months for 10% profit. What you know is that you'll get income from it, and over a period of time, it will appreciate. So I think I'll stop there. I think that sort of gives a ballpark view of the theory around it. Maybe I will let my senior speak to the sitting in the hot seat and driving one.
Thank you, Ken.
That's a good one. Yes, please go ahead, Einstein.
Let me just add to what Ken has said. Maybe just by way of background. So ICL on Asset Management was licensed as a REIT manager back in 2014. But in 2019, an opportunity arose where we were able to acquire the business of Stanley. And one of the businesses that Stanley was managing was the REIT. And as a result of that, we became the REIT manager for the Fahari REIT in May 2020. So it's been just over a year, maybe a year and about 2 months since we've been running the REIT. And what maybe I want to just discuss briefly is really about structure, just to elaborate on what Ken has said in terms of structure. Just to simplify it, it's really the regulations that set up the REIT basically along the lines of collective schemes. So basically, you're pooling assets under a trust. And what that does is therefore provide an opportunity for investors to bring in their money and be able to invest in a trust that invests in property. And what that therefore does is that you're basically assigning that responsibility to a REIT manager who is licensed to manage the REIT. And maybe in terms of experience, just to give you a snapshot of what has been happening, by virtue of the fact that a REIT invests in property, you would therefore expect that all the dynamics that affect the property market would therefore directly also affect the performance of the REIT. And this is exactly what has happened over the last 1 year or so. As you're all aware, we've faced the COVID situation, and that has affected the property investment market. In terms of the portfolio that the REIT holds, we have a mall, that is Greenspan Mall. We own a commercial property on Gitanga Road, and we own 2 light industrial properties. And because we are listed, the information about the performance of the REIT is publicly available. But I'll just give you a brief snapshot about what has happened over the last 1 year or so. One, of course, is the impact of the COVID situation in terms of rental income. And as you probably are aware, a lot of businesses faced challenges as a result of the restrictions and the regulations that were imposed by government to manage the COVID situation. So some institutions had to close down. So you can imagine, for instance, in a mall, you would find various types of businesses. You've got schools, you've got bars and restaurants, you've got hotels. And so the effect that those businesses, the effect that, or the impact that COVID had on those businesses obviously also affected the REIT. But you also had the additional factor of we were struggling with an anchor tenant. And that is again is information that is in the public domain, but that has been addressed. That has since been addressed. And therefore, we are optimistic about the expected improvement in terms of the performance. The other issue I thought I should also mention is with regards to the responsibility. Why REITs offer a unique opportunity also to investors. One of the things that has become very clear in REIT management, especially for a listed REIT, is the issue of stakeholder management. One is the issue of reporting. There's a very rigorous requirement by the regulator and the listing requirements in terms of reporting on performance. So we usually have a very busy season when we are reporting on the performance of the REIT, both for the annual reports and also for half year. So we will be expected to report on the half year performance in June. And what that does is that it gives us an opportunity to be able to present this information to the public about the underlying performance of the REIT. And that therefore also enhances the issue of transparency because you're able to see as an investor exactly how the REIT is performing. If you access our website, you'll see we have a public, the annual report. We've got the previous annual reports, and you'll be able to get information about the actual underlying performance of the portfolios. And that will give you an insight as to how the REIT is performing. So I think, I don't want to go into too much detail, but I think in terms of returns, the returns that you can therefore expect as an income REIT, the income that you earn is related to rental income that you earn less the costs of managing the portfolios. And therefore, again, that is also publicly available information. But what I would like to say is that these opportunities are available because we are listed. You can access the investment through the market. The same way you buy shares in the market is the same way you can buy units in the REIT. So I'll stop there at this point, and maybe I can answer any more questions that you may have.
Actually, you answered one of my questions already, because one of them was going to be, yes, maybe we've gone through the exercise that Elizabeth talked about, which is understanding the 4 T's, the 4 P's plus T. Yeah, you've also done your own profiling. You've understood what it is that you want from this investment. And my question was going to be then, how, if you decide that, yes, you're going to have real estate in this particular form in your portfolio, how do you tap into it? How do you get into it? And I think you've just told us that it is something that is listed. But because it's a listed product, doesn't that mean, therefore, that it has to be bought through somebody who is licensed? Could you just walk us through that a little bit?
Yes, yeah, thank you for that question. Yes, because we are listed at the Nairobi Securities Exchange, for you to be able to buy units in the REIT, you will need to go to your broker and be able to buy the shares. What we've also done in terms of investor relations, and my colleague Elizabeth is actually the one who handles that, is what we've also done is to be able to engage our investors. And maybe just to branch off a bit, in addition to publishing our financial results, one of the things that is very important for us is to engage with our investors. So we have been holding investor briefings, basically explaining, in addition to explaining how we performed, but it's also important for us to update the market about what is going on in terms of the REIT. So just in the same way that you see the listed companies holding investor briefing for analysts, explaining the underlying performance, explaining the outlook, we also do the same thing with regard to the REIT. So we held an investor briefing in early April, where we explained our performance, and we also explained our outlook, and we also engage on a continuous basis with our investors. So what I would therefore say directly to answer your question on Wangeci is that you would need to go through your stockbroker to be able to buy units, the shares in the REIT.
As I unmute myself, thank you for that, Einstein, because I think it's really helpful. And we have some people in the audience asking for the website for ICA. So if you or Elizabeth could just type that in there, that would be really helpful. But Kenneth, I have to put the association on the spot a little bit, just because, we've been reading about some REITs in the news, good and bad. The good news is it's really exciting that Aecon has this REIT that they're doing, and you can also maybe tell us a little bit more about how the different ways in which, whether the different ways in which money is raised for these REITs makes a difference. Yeah, if you could touch on that a little bit, that would be great. And then also, we keep reading about Seitan in the news. It's the elephant in the room, and I do think that we do have to bring it up. I think I would be remiss if we didn't. And again, of course, you can only comment to what's available in the public domain. Because again, REITs have this reputation of being complex, opaque instruments, but we're hearing from you both, from all you three, and also hearing from the regulator that this is actually one of those instruments that are supposed to be transparent, that are supposed to be, very easy for people to be able to see what's behind the numbers and to have an understanding of what's going on. But then we keep seeing Seitan in the news. There's rumors about whether they are capitalized, not capitalized. People can't get their money out. I mean, okay, yes, right now it's a bit speculative, but like I said, you can give examples of what's in the public domain between what is, how things are supposed to run smoothly, and sometimes where this opacity comes into play, and therefore makes investors a little bit wary about what's going on.
Okay, thank you, Wangeci. I think this is one of those questions one has to be very careful about, because you can give an answer and invite a call from your learned friends. So I think the way I'll answer Saiton is, and I think what I know about them is, yes, they do have a REIT manager's license from the CMA. And number two, I know they did make an application to the regulator, who is CMA, for a REIT. And seeing as I don't sit on the CMA board or the approval, I think I would like to leave that there. Maybe we can circle back to David Kanye or somebody from CMA to let you know what's happening with that. But I think it's important to point out that the only REIT in the market is for Harry and the Aecon REIT. So Saiton do not have a REIT in the market, whether a development REIT or an investment REIT, they do not have that. I think they're in the process, or they were in the process of getting one in the market. I think the way to look at their conversation of the REIT is, like all asset managers, they all have different products that they offer, REITs being one of them. So I would imagine that is where they were heading with that. And I think that's what I can say about that. Okay. In terms of fundraising for REITs, the traditional method has always been, there are two routes. One, you prepare an investment memorandum and you do your roadshows. You do what they call a catwalk. And I know it's a bit sexist, but I guess men were the ones who came up with it. And you go and visit all the people that you feel would benefit from it, or are looking for an investment product that you feel your yield that you're proposing will hit the threshold. And that has been traditionally the way a lot of this fundraising has happened. But there's now been a view that is being proposed, especially when it comes to around property and the new investment structure like the REIT. There's a conversation around trying to get people to pool properties together to start with, right, into a sort of a structured entity. Run that for a couple of years, get some track record going. And I think Einstein will just have to forgive me because I'll have to keep giving him as an example. You see, why people go to ICA is that they've got a track record, they've got a history, they've got a strong management board, management staff members in whatever it is that they do. Now, when you come in with a new product, and then everything is new, including the board, and you're wondering who are these guys and do they know what they're talking about, right? So there's been a train of thought around putting assets together, running them over a period of time, creating a track record, then coming into the market. Both options are open to CMA, for CMA approval. And I think that the structures that are in place are rigid enough to make sure you do not get funny money. I think everybody who raises money, there's a requirement around anti-money laundering and the usual of it. So to make sure whatever goes in is clean money. There's also been a case where, like we all know, and I think this has been alluded to by a lot of the speakers, that in Kenya, property has always been a storage of wealth. The first thing you do is you get some money, you'll buy an apartment. Before you know it, you've got 10 apartments and the rest of it. So there's been a conversation around getting a portfolio and now listing or turning that portfolio, right? The difference is, one is you're getting like-minded people. There's a conversation going on with, and I think this is out there. I think some of the larger pensions are looking into getting a REIT out there. So that's different, because there are different people saying, look, I would like to put this there. And as opposed to now a large family holding or a company that has been developing property looking at exiting. And I know there's been conversations around, if I own the property, then when I come to exit, am I just not simply packaging everything, from the silverware to whatever is in there and just getting it out? And maybe the answer to that is, where REITs come in is when you come to a REIT structure, there's the trustee who will look at the assets to which you are now putting into the REIT. And they tend to be very, very stringent, because they will just not allow, because they'll not just allow any funny assets, because REITs perform, the quality of the assets underlying the REIT will, number one, underpin its performance, and number two, will that's what investors will be looking at. You're telling me to buy what's in this REIT. So when it comes to sometimes founders and that whole thought process around is what they're putting in the REIT, the right thing for it, and a lot of Kenyans tend to be like, no, this guy is just passing us all these problems. No, with the regulation that's there, you can have that as an entry point with good assets, weeding out the bad ones, and also because they are forced as a sponsor to retain some skin in the game for a period of time, then they're taking the same risk you are taking. Yeah. So in terms of fundraising, those are the three main options.
Well, those are some really interesting ones, but and especially because you had talked about some of these tax advantages that that were that you discussed, especially that we're seeing now coming into these limitations, especially when it comes to real estate. Yeah, so having this as an add-on vehicle, I think is great. I remember reading somewhere that one of the reasons why the REIT was then developed as a vehicle was really because there were so many different developers, yeah, and people sort of forming these special purpose vehicles in order to do these joint ventures. How is that different from the REIT? Minus the listing part and the CMA oversight. Einstein, maybe you can tell us a little bit about that.
Well, I think in terms of maybe I could start by answering in terms of the why the REIT structure is helpful in terms of being able to enable one develop property. Number one, the fact that it can be specialized. And I think the question you're asking really is about, the difference between that and any other kind of ventures relating to property development. So number one, what it does is that it brings investors together, because I think the first, in terms of specialization, you will be able, for instance, and I'll give the examples of what we have in the market right now. We've got, for instance, Aecon, which specializes in affordable student accommodation, and also comparing with what happens in other markets, all over the world. And I think what with REITs one will be able to do is that you can actually specialize and focus on specific sectors. And that what that does is that it also brings in a lot of specialization. It brings in economies of scale. And that one, therefore, is able to basically derive optimal returns and capacity from that kind of a structure. So I think, and secondly, the other one is with regard to liquidity. Again, when you bring in pools of investors together, as opposed to disparate, investors making their own investments across various investments. When you pull all this together, even if it is not listed, there is still an opportunity for you to be able to exit that investment when you would want to, because one of the challenges that property has is illiquidity. And when you bring investors together, it means that you can be able to sell your units at some point if you need to exit, and you can also get in when you need to. So I think basically what I would like to say is that in terms of the structure, the REIT has a significant advantage. And I think maybe I'll also use this opportunity. I think the most important thing that we need to address right now is really about investor education. And I think it's something that Ken and we as members of the REIT Association of Kenya are also really focusing on, in order to bring this to the attention of property developers and potential investors about why REITs offers an advantage in terms of being a vehicle that enables effective investment in property. And I think over time, we're going to see a lot more of this happening. We build capacity through conferences and basically bringing in people who are experienced in other markets to help us educate the wider public about REITs.
Thank you. Thank you for that. I am looking at our time, and our conversation was going so well. I'm like, I don't want it to end. But I actually do want to, just ask you one last round of questions, because one of the things that was mentioned by Ken and even you as well, Einstein, was around the liquidity of REITs, which is actually very different from liquidity in a lot of other markets, where REITs are, at least initially, were always sort of set aside as an asset class that required quite a, first of all, what they were calling a sophisticated investor, right? And this was really because it was going to tie up, your money over a period of time. Whereas with this, it's from what I'm hearing is that actually that's one of the huge advantages, is that there's always somebody to buy your shares when it comes to REITs. So if you could just talk a little bit about those differences, mainly because, again, today's conference is also targeting the diaspora, so that those who have that different experience can be able to understand, number one, what makes the Kenyan one different, but also number two, Elizabeth, if you could talk about whether Kenyans in the diaspora are able to invest back home. If you could just touch on that a bit, that would be really, really helpful.
Okay, I think in terms of the Kenyan, or rather the Fahari specifically, as I said, the accessibility is really, as a normal ordinary investor, it is not restricted. It is open, and I agree that as being the first listed REITs in the Kenyan market, there are a lot of lessons that were learned as a result, and that has also lessons learned even in terms of the underlying performance. When you look at the gap between what you call the net asset value if you look at the underlying portfolio of the investments that we have against the issued shares, and you compare with the share price, there's a huge disconnect. And there are lessons that have been learned as a result of that kind of a structure. But to go direct to your question, you can buy these shares or units in the REIT by, again, going through your stockbroker. It's not restricted, but this is more specifically related to the Fahari REIT. I think with the Akon REIT, it's a bit different in terms of the kind of investors who can be able to access it. And this is also not listed, but I think maybe Ken can elaborate on that.
Okay. Yeah, thank you. I think just to add on to what Einstein has said, liquidity. I think one of the things we're talking about in the whole of this profession, in the whole of this sort of conference is, it's one thing to have wealth. What does that wealth do for you? And should you decide to either shift baskets or exit a property, or the patriarch passes away and now there's property to be divided, how does that work? Now, if you set up everything in a REIT setup, right? Mind you, now here we put aside that story of, Kenyans love, you drive down Kenyatta Avenue and you say, that 20-story building is mine, or I own this 50 apartments and the rest of it, but they never look at it as property is a component of a multi-asset portfolio. You should have your property there, your equity there, your cash there, your fixed income, and whatever else you need to put in there. And so you tend to find people acquire a lot of property, and I think what you guys were talking about earlier, where you find somebody is a billionaire in property, but when they're unwell, there's significant difficulty in raising money now to treat them. Now, if you look at a REIT, had he had that portion of his property assets in a REIT, he can sell, go to the market, to his stockbroker, dispose of either the number of shares that he needs to, which again, with property, you find if you've got a 4-bedroom apartment, you cannot say, I'm going to dispose 1 bedroom because that's what I need for my treatment. You have to dispose of the entire property. So it gives you not only liquidity, it also gives you partial liquidity. You can exit to the level you need to exit. The other thing that I think is critical to mention is, you've always found people saying, yes, my apartment is worth 20 million shillings. But when you put it in the market, you start getting offers of 13, right? And the question becomes now, what do I do? Now, a listed REIT, you've got the traded price there always. So you always know where where you stand. So in terms of liquidity and handling property, REITs are the best way to go. You've got Einstein and then your other asset managers. You don't need to be bothered. Is there a tenant in my house? Did I let it to one person and now there are 50 people living there? Is the lease renewed? Am I getting the right rent? Is it being maintained? Is it being insured? People tend to forget that property is a very sexy asset, but it takes a lot in terms of management. It takes a lot in terms of management. And if you're not now focusing purely on running your property assets, you just definitely will not get the returns that you should. That's where you tend to find people will buy a piece of land, never go and see it. On the 7th year, you decide to go and see it. You find some chap moved in there many years ago and is claiming haki yake and it belongs to him. So it's to encourage Kenyans that they need to take property seriously. The way you take your Safaricom shares, the way you take your government bonds, you need to have your property managed by knowledgeable, experienced managers and be able to move in and get out. If you say, I don't feel like being in property, I think property is going to suffer over the next 2-3 years, you sell your REIT shares. In the next 2-3 years, you come back and buy more, right? So you need to have that flexibility. And I think that's one thing that I think Kenyans and I think Africans in general in nascent markets need to appreciate. And finally, as a passing term, since Fahari was listed, it's a very short time, right? It's a very short time, and we all know we're not living in a bubble. I won't go through all the process we've had to go through with repeat elections and and our constant politicking and corona and all of that, right? But property is a long-term investment, and REITs are long-term investments. You get your income, but you need the long-term to get your capital appreciation from it. So it's a long-term. So don't shy away from it. If you're a young person, which I had a lot of people talking about, don't go, okay, I need to be careful here. I'm not saying don't buy your 1/8, but you're better putting off your 1/8, that money, in something that will give you a little bit of income and a little bit of capital appreciation, bearing in mind you cannot eat soil.
Thank you. Thank you for that, Kenneth. Elizabeth, will you tie up for us and then we move into our next session?
Sure. So your question about if Kenyans in the diaspora can buy, yes, you can invest in the vehicles that we have showed, especially the DigiTrust platform. You can be able to invest back home as long as you have a national ID and a KRA PIN, you're good to go. We've got all the payment platforms available for you to make the payment to your account and also to get the money back to you. All right, Wangeci.
Thank you all so much for, again, really just playing that part in the education of all of us, especially when it comes to asset management in general. I really do like what you said to us about the 4 Ps: people, process, philosophy, performance, and of course, plus T, terms and conditions. What you also mentioned about really just being very clear about what it is that you want as you get into this particular investment, and understanding yourself as an investor, being able to profile yourself, because that helps you fit into the different categories that you want to put your money into. So thank you for that education, and also for pointing out those red flags. We're in the era of Bitcoin. We're still the nation of quail eggs. So we like that. We like that high return. We like just jumping into where we think everything is going. So thank you for reminding us to take our time, and that to remember when it's too good to be true, it is too good to be true. Einstein and Kenneth, really, truly, thank you for taking the time, for demystifying REITs for us, for pointing out that this is an alternative vehicle. It's an alternative for our beloved plots and apartments, and that these things can work together, and that you can get into a REIT even as an individual investor. You don't have to be a sophisticated investor. You're able to do so, even with, well, actually there was a question here asking about what the minimum is to be able to buy one. But as Kenneth pointed out, we do have the Fahari REIT that is a listed REIT, and that one you would just get through your broker. and you know, and thank you for your education and for teaching us this afternoon. We really truly appreciate it. I do. I'm going to turn it over to Anne, who's going to say something to us before we move into the next session. But again, thank you, ICA Lion, and thank you, our panelists today.